Hello and welcome to Creative Outcomes. I am your host and partner at Upsource Accounting, Ryan Watson, and I am joined today by a new face to the podcast, Ashley Vaughn. Ashley, say hey.
Hey, how are you?
Good. We got a fun topic today. We brought in Ashley, the specialist here. Ashley has a very specific point of view on this topic and is and we invited her here to talk about it. And that topic today is late accounts receivable, late AR. I feel like when we are having conversations with clients or we do our monthly hot seat, there's always a question about I've got this like growing list of aged AR. How do I collect against it? What do I do about it? Etc. And so we've heard it enough for us to say, you know what, let's dedicate a specific episode of this podcast to really tackling what do we do about this stuff? And so let's get into it. But Ashley, before we actually get into the tactics of like, how do I fix it or what do I do to prevent it? I'm curious your perspective on why this is a question that comes up. Why is this important? Why are we talking about it?
Yeah, when I think of AR, it's important. It's cash. Cash is what keeps the company going, and late AR it hinders your cash flow, and it can also halt your operations and stunt growth of your business. So, it's really important. I think it's also one of those things that I don't know. I feel like cash is kind of one of those things that you get kind of antsy talking about with clients. So, but it's really important just to like be completely honest about what your AR policy is up front and have those communications, have that open communication with your client and stuff because AR can be something that it's a slippery slope. I feel like you have one and then you have another one and then you have another one and then half of your AR is past due.
Right. Yeah, I mean, look, that's I totally agree, right? Like the thing that I always say about agencies is that, like, with endemic to sort of project-based businesses, you have these like dramatic peaks and valleys of cash, and that's what makes running these businesses so challenging. And so when we're doing cash flow forecasting, we're putting a lot of weight behind the sort of assumption that you send an invoice, you collect an invoice. And when you can't rely on that, send an invoice, collect an invoice, it kind of throws the whole thing into a loop. And you may have like what is a perfectly healthy business with, sales that you should be recognizing, and the whole thing grinds to a halt and you can't make payroll because you didn't collect on what you were owed. And so it's a big deal.
I think it's one of those questions too. We get clients all the time. They're like, I have profit. I just don't have cash. Where's all my cash?
What's going on? Yeah. Sitting on the balance sheet. It's in this AR we can't collect. And so, cool. Okay, great. So I'm convinced this obviously matters quite a great deal. So, I'd say, well, let's get into like what do we do about it. So maybe my first question would be, before I go all the way to the assumption that I'm gonna have it and how do I deal with it, I think that may not be a fair assumption. I think there's plenty of ways that you can sort of run your business and structure your policies and your processes to avoid or mitigate at the very least mitigate the risk of having a substantial amount of past AR. So in your experience working with clients, Ashley, what are some things that you would recommend that an agency do to try to avoid or prevent aged AR from happening in the first place?
Yeah, I think one of the biggest things is actually having an AR process and letting your clients know, hey, this is how we do our AR. It should be one of the first things that you talk about. And then sticking to it, that's another thing is like, this is what we do. And if you're late, actually charging those fees and doing that stuff. But the other question is when you're talking to your clients about your AR process, you want to know about their AP process. Like, when do they bill, the timing that they do billing and stuff like that. Because I know I've been on both sides of the conversations, and I know one of the things is like, why is this always a few days late? And we finally got talked to their AP person. They were like, oh, y'all send the invoice 2 days behind when we close AP for the month. And it was just that simple. It was just changing the date.
Days, and it turns out to be a whole month, right? Like what an easy conversation to have that you just have to have it.
Yeah. And I also think if you put yourself in front of that client and you talk to them, you're friendly with them. They're always, when they're checking, like, who can we pay if they do have cash flow issues? They're, oh, well, top of mind, they're going to pay you. That you're going to be one of the first people that they pay.
Well, that's exactly right. And I think like a lot of I mean, I think just in general, you mentioned this right at the jump, but like people feel somewhat uncomfortable about talking about money, right? It kind of is this thing that's like the elephant in the room. But like in your experience, have you ever had clients like ruffle when you just have an objective conversation with them about like payment terms and payments? Like I've never really had that be a problem. We put so much like stigma on it, but everybody understands the deal.
Yeah, like everyone gets it. You do a service, you get paid for it. Like everyone understands it and stuff. So I think it's just it's an old way of thinking about it. I also think too that just like AR processes have evolved just with technology evolving. I mean, if you think about the way we used to do AR, you used to mail the AR invoice, then they would have to collect it, then they'd have to put it in, and then they have to write a check, and then they have to mail it back,
Heck, put a stamp on it, mail it.
and then you'd have to mail it, and then you'd have to come in, get it from the mail, do all that, and then deposit. Exactly. So I think that's also is just like making it easy. Make it easy for them to pay and make it easy for you to invoice them.
Well, and I think that's I mean, all of your points have been phenomenal. I think that's maybe even one of your better points because I think so often we just kind of assume that, well, this is just how it's done. I'm going to send an invoice, they're going to send a payment, and it's that payment is kind of at their discretion. But it doesn't have to be that way, right? Like, so for instance, if you have a portion of your business that's heavily retainer based, the clients of ours that have the most success are creating automatic payments for that, right? And there's plenty of ways to do automatic ACH that have kind of low fees. We also have clients, by the way, that use tools like invoice.com where you get the ability to go in and direct debit a variable amount. So even if it's not a retainer, it's like I have an invoice, it's a variable amount each month, but I've gotten the okay to go in and pull that money. That takes your ABR cycle from like at best 30 days to 30 seconds. And it takes the whole collectability thing off the table.
It takes it out to the table and it's just it's super easy. You can see it. And I think it's automating as much as possible in today's world, like getting becoming an efficient, running your business to the efficiency that it can be. I think one of the big things too is just like there are some clients that you're going to deal with that you can't choose. You don't really have a lot of freedom in their payment terms. A lot of the big clients and stuff like that, like you're unfortunately, if you want to do business with them, it's just it. But you can negotiate getting things up front, getting that deposit up front and stuff. I think really helps too because you have to remember like you're doing this project, and if you're paying your people to do this project, you're paying freelancers if you need to or anything like that. So just having a little bit of that cash up front allows for you not to have to front that.
Well, and again, that is such a good point. Like you have to it kind of goes back to your other point about sort of understanding their AP processes. So for instance, like you're working with Salesforce, you're working with Procter and Gamble. There are certain things like you said that are not easily negotiable, particularly for a small vendor like you, and that may be the payment terms, right? When you send me an invoice, it's going to be 90 days. Full stop. That's not negotiable. But what there isn't a policy on is how I do billing. Can I bill in 3 milestones? Can I bill 100% upfront? Like the things they buy are so variable that you just have to know the game you're playing. And like you said, okay, fine, 90 days is just what we have to live with. But if I'm going to wait 90 days, I'm going to make sure I'm going to wait on half of it. I'm going to bill half up front. And your client may have that flexibility to work within their system. And so again, I think the macro point on this, and then we can move to my next question, is just being thoughtful, thinking about it, understanding how they operate, having the conversation. It's funny as like another anecdote. Actually, going back to thinking about P&G. At I was the CFO at an agency, and when I came, we had like a payment. Our average AR cycle was like 75 days or 80 days or whatever it was. It was like much longer than it needed to be. And like in our case, the number one issue was simply just not ever having the conversation about how AP worked. Like we'd have sellers who would sell a thing and they would just create an invoice and they would just send it to their client contact. It's like, well, that's not how it works at this company. It's that the client contact got it and they just sat on it. It's like, well, I don't pay. They're like, I don't pay invoices. I assume you did the right thing. We didn't know. We didn't do the right thing. And so by simply saying, hey, wait a minute, how exactly am I supposed to do this? Oh, you got to go into Coupa and you have to do it this way.
Exactly, knowing their invoicing cycle, like, if you have to do things, if you need a PO. I have there are so many clients that they're like, "We're not getting paid," and then they call and they're like, "Well, you don't have a PO. We don't have a PO for it."
Don't have a PO on it. It's like, and so again, this is all obvious stuff, but the biggest issue is deal with that upfront at sale. Okay, how do we do this? What should I expect? What do I need? And by the way, if you have a sales force, like kind of tie that to commission. Like I don't get commission until like the definition of closed includes getting valid billing details, not just getting a signature. And that kind of creates, aligns the incentive structure. Anyway, I think that's all wonderful, Ashley. Okay, so let's just say I've done all the wonderful things to sort of mitigate my risk of having aged AR, but inevitably there's going to be clients that don't pay and or are slow to pay. So in those instances, I've got the over 60, over 90, whatever it is. What are some things that an agency can do to try to collect that age stuff?
I think always have a follow-up plan. It should just be in your AR. If they're over 30 days, this is the step to do. If they're over 90 days, the step to do. And then I also think, like, all of these automated invoicing systems, they will send an email, but there is nothing better than a phone call. Or, hey, you want to jump on a Zoom and talk through what's going on? Because a lot of the times, maybe the person's just, oh, well, that person doesn't work here anymore that you're sending that email to. So I think, like, also getting in front of the client and getting in front of the person that, like, makes the decisions at the client is really important. Late fees, I know everyone hates to pay a late fee, but, like, late fees and stuff, I think, like, those are the three strategies that, like, I always do, is, like, always have a follow-up plan and stick to your follow-up plan. um because if you don't stick to it, if you, like, allow a client just to do whatever they want, and then all of a sudden you're, like, sending follow-ups and sending late fees, they're gonna be like, well, we've always been behind on paying you. You set that precedent.
On the risk of frustrating them. Well, yeah, and I mean, and Ashley, you've been on the other side, right? We sit on the AP side too, and we've all had, look, it kind of there's all manner of reasons why folks aren't paying your AR, right? It could be misunderstanding, could be at the wrong place. It also could be, and sometimes often is, they have a cash constraint, right? Like that your client is doing it on purpose, right? Like they don't have the cash to pay all their bills. And so again, we have been in those situations on behalf of our clients that have cash constraints where we're saying, okay, well, we have to elongate the AP cycle. We're going to have to late pay certain things. And you know what? That becomes kind of a somewhat of an arbitrary judgmental decision around what can we pay late and what can we not? Perceived risk versus reward, right? And if we're looking down and we say, I think this particular vendor we can pay a month later. That's okay. They're going to be fine with it. It's no big deal. Not a huge interruption to service. This vendor, I can't. This is my electricity. They're going to shut me off. Can't pay that one late, or I can't pay the mortgage late. And so sometimes, to your point, it's about being the vendor you can't pay late.
And I think also you can always just stop work. I know, like, it's one of those things, but it's like, if or stop work, or at least, like, try to, you might not be able to pay the full invoice, but can you pay this amount? Like, being flexible with what you can do too. I mean, not everything is black and white. So being flexible with those clients. But I mean, one of the biggest things I tell all my agencies is, like, if they're over 90 days, we should have talked to them at 30 days, and then at 60 days, and then between 60 and 90 days, let's stop work. Let's get a plan to collect. Let's talk to them.
Yeah. Well, and I mean, yeah, again, there's totally agreed. And so again, a combination of being the squeaky wheel and then having some real teeth, pencils down. Like there's just no these are businesses, right? There's just no reason to be taken advantage of that way. You cannot provide free services. And so to your point, like it's pencils down until either we get full payment in full or we have a plan that we are executing against. So it's not just a promise. If it's like, okay, I owe you 60,000 and I can't come up with 60,000, but we can come up with a 4-month payment plan. Great. 4-month payment plan. I need to see the first one before I pick the pencil back up, right? There has to be some real follow through and not just empty promises. And you can't be afraid to do that, right? We're not running charities, we're running businesses. So Totally agreed with that. Okay, then I guess my last question for you, and this has all been like really good. Um, any thoughts on, we were unable to mitigate the risk, we were unable to collect late AR, and now it's like it's kind of starting to enter the graveyard, right? Where it's looking like it's not gonna happen, or it's not gonna happen outside of some like real extraneous events. And so, have you seen any success with strategies to collect things like that? Like, for instance, engaging a collections firm. Have you seen success with that? Like anything once it gets to this point?
So I have a really weird opinion on collection firms. I just kind of think that the only one that wins is the collection firm. Um, because once you bring someone to collections, the relationship is kind of severed at that point. Like, and I mean, I get it. It's like, well, I you might not want to have a relationship with them if they're not paying, but there are certain things that just happen. Clients just are really in a bad place, and it doesn't mean that they're always going to be there. So you don't want to like completely shut that door. Um, and you are paying a fee on a collection agency. So like one of the things that I first say is like, let's have that candid conversation. Let's see if we can set up a payment plan. Let's see if we can set up something before we go to that route. Um, because that's just, I don't know. No one wins. You don't get all your money.
Again, I mean, it's kind of one of those, like, to use to your point, and sometimes you simply just can't get an audience with somebody. In which case, again, maybe a collections agency can, but like, whatever. But ideally, you get an audience with them, and then we understand the situation. And to your point, like, we come together as two human beings and try to solve this problem. And if it's the kind of answer that doesn't, if it's the kind of situation that has no answer, like, hey, we're going bankrupt, like this thing is, it's we don't have the money, then you're not going to squeeze juice from a stone, whether you're a collection agency or somebody else, right? And so again, I think my overall, I take maybe a little bit more of a neutral approach to collections agencies. We certainly have clients that have done it. I'm totally supportive. Whatever you want to do. I don't know. I can tell you for sure, I don't have one in my back pocket that's like, oh yeah, these folks have phenomenal results. You should use this. I've never seen their. I've seen there be success maybe on the margins. And to your point, like, you better be pretty confident that you're going to move past that relationship more or less permanently. So I've seen some success on the margins, but for the most part, if we get to that point, like, there's a pretty good reason why they haven't paid you, and it's probably just a write off.
Well, and that's what I was. And by the time you get to that point, I don't expect for any of my agencies to be doing work with them right now. Like the work has stopped, things have halted. Like so, I mean, if it gets to that point, like you said, it's a write off, or it's just exactly. That's I think the biggest thing is moving on from it because it takes time. I mean, it's the time that that our agency owners spend collecting like that's time that you could have been doing sales or something like that. So you have to weigh like is it worth your time.
Yep, yep. I think that's right. And again, I think the last point, kind of as I think about the collections agency thing, it just is for those clients that have for those agencies that have clients that ultimately get to this point. We have some agencies that have kind of a lot. They have like a basket of clients that are just dead and would be collections worthy or whatever. I think that if I'm you, I'm probably evaluating a little bit my front door. There's a limit to how easy it is to evaluate the credit worthiness of somebody, and I don't know what value you're going to get from getting Dun and Bradstreets or things like that. But the thing you absolutely can do is invoice as fast as possible and evaluate your response on that. And so, like, if it's starting to go south early, then I'm gonna pump the brakes a little bit and ask myself, am I ever going to get paid from these folks? Like, I can at least limit the amount of effort I put in on folks that are giving me some gray flags pretty early. That's what I would recommend for folks like that.
I mean, I had a client who had a big, like you said, graveyard AR, and I was like, we need to revamp this whole system, and that's what we did. We revamped the whole AR thing, and like one of the things that we did was a fourth of the every project that came in, a fourth of it was due at signing.
Exactly. And then like, you get yeah, pretty early if you're going to be the kind of client that pays me. And if you're not, I'm not going to do the other three-fourths of this thing. So, yeah, cool. Okay, look, Ashley, this has been awesome. A lot of really good stuff here. So for those of you watching, let me quick reminder: like and subscribe. Put some comments or questions in the channel. We've got a whole host of other topics out on YouTube. But for now, hope you've enjoyed it, and we'll see you next time. Thanks.